But let's put the focus on Justdial, because dialing into a profitable third quarter is Justdial. They saw a 4% rise in PAT and an 80% spike in terms of EBITDA. The company has also seen a 33% surge in unique visitors across various platforms that it offers. Joining us now is Abhishek Bansal. He's the Chief Financial Officer at Justdial. Really give us a fine print into Justdial's strong third quarter numbers. Mr. Bansal, thanks so much for joining in. Very good to have you on the show. You know, it's been a stable quarter for the company. What has worked for you this time around?
See, quickly to run you through the operating highlights for the quarter, the usage of our product continues to grow at a healthy rate. We had about 108 million unique users for the quarter, which was up about 34% year on year. In terms of our database, again, it saw about 20% year on year growth to about 20.7 million listings. In terms of financial performance, we had 9.2% year on year revenue growth, which was highest for last about 4-5 quarters. Hopefully, we should be able to build on it further. The key highlight was the margins. So EBITDA saw about 80% year on year growth. So for this particular fiscal year so far, during the first 3 quarters, business has delivered about 120 crores of EBITDA compared to 110 crores for last full year. And this is despite 45 crores of incremental ad spends that came in this year. So it was a decent to healthy quarter for us in terms of getting our efficiency back, getting profitability at a solid growth trajectory. So hopefully we should be able to build further on these numbers.
Right. In fact, you mentioned this significant improvement that you've seen in terms of EBITDA margins. Can you help us understand what were the key growth drivers that contributed to this?
See, the key cost item, which is employee benefit expense for us. So compared to last year, though employee costs should have gone up by 8-9% in line with the inflation trends. However, we have been able to curtail that on absolute terms to even lesser than last year. Other expenses, again, we have been able to optimize those other expenses a lot. So net, we have been able to keep our costs flat despite advertising spends. And the bulk of the incremental revenues are directly flowing into operating profitability.
Right, and in terms of the unique visitors share, the share of mobile visitors has been increasing every quarter for you. Do you see that, do you think that that has peaked out, or do you think that we will continue to see this uptrend going ahead as well?
See, like all of us are using smartphone these days, data penetration is increasing. So it's not a surprise that mobile continues to gain share. So mobile now is about 69% of our overall traffic. Considering the trends, we do expect mobile share to continue growing. Desktop usage would be probably be flat at best.
All right. And in terms of, pricing and realizations, how have those really panned out this quarter? Or how much of your revenue growth really came in terms of realizations?
See, in terms of pricing, we do enjoy pricing benefits. This particular quarter, 5 to 6% growth in revenue came out of realization improvement. Rest 3-4% came due to campaigns. So realizations which had been on a structural decline due to growing share of tier 2, tier 3 cities, it's good that we have been able to bring those back up. So from the lows of 4Q17, realizations are up about 7%.
All right. So then if we talk about the services that are offered, considering you're seeing, across various platforms, you're seeing traction, how significant is the website service and the payment service going to be in the future?
See, at the end of the day, we monetize SMEs, right? So in our core business, we give visibility to SMEs on all our platforms. Through these additional tools such as websites, payment solutions, etc., we want to help SMEs have tools such that their dependency on any other third parties in the ecosystem reduces. So websites have seen good traction for us. We have been able to fairly sell good number of bundle products. So going forward, whatever be any such tools which aid SMEs, help them run their particular business better, we would definitely be focusing on providing those tools to them.
All right, fair enough. Let's talk about expansion then. If you could give us a sense, what are the new initiatives that you have planned, and are you looking at any acquisitions?
See, we are in the process of releasing the revamped version of our mobile platforms. So that should get released in about probably 3 to 4 weeks. The revised version of our mobile platform will see a real-time chat messenger integrated, would see a lot of curated content, which should ideally increase user engagement. In terms of any acquisitions, etc., we have about 1,085 crores of cash on our books. There haven't been any attractive opportunities which could be seen as providing good synergies so far. In case there is any such opportunity in future, we would be happy to evaluate.
All right, nothing looking good so far in terms of an acquisition or inorganic growth, but still open to it as such. And in terms of geographical expansion, if you could take us through the plans of the company on that front?
See, within India, we have presence in 150 plus cities. We have our feet on street present in all the tier 1, tier 2 cities. Yes, there are tier 3, tier 4 cities, even tier 2 cities where penetration should be ideally higher considering the amount of data that we have in those particular geographies. But we want to ensure that we don't compromise on productivity during those expansion efforts. So that we are taking steps to, on a gradual pace, expand in those particular geographies. Outside India, we have data already in US, UK, Canada, UAE on our platforms. So maybe in future we might want to venture into Southeast Asian geographies as well. To start with, we would want to have data on our platform so that we could serve that particular information to the users in those geographies.
All right, fair enough. Our last question then is, as we look at the end of FY18, just one more quarter to go, what do you see being the overall growth drivers, and what's your outlook for the full fiscal performance?
See, FY18 first 3 quarters have seen about blended revenue growth of about 8.5%. We want to improve further on these particular revenue growths as we enter into FY19. So the target is to achieve that particular double-digit growth on a quarterly as well as full-year basis as soon as possible. Margins which are 20 to 23% for first 9 months. We are confident that we should be able to sustain those at even current growth rate levels. If we are able to grow our revenues further, operating leverage should help aid margins.
All right, we leave it at that. Thanks so much for really giving us a sense of how this quarter panned out, and of course the full fiscal outlook from Justdial. That's Abhishek Bansal, the CFO at Justdial. But let's also put the focus on Havells, because they